Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 7th of April. Starting off with active energy, where we've got progress from that trend line break that we had the end of last month. I was just trying to get that back. Here you can see that we broke 0.15, then broke the 50-day moving average just above it, and made decent progress since then. Rather ambitious 2 to 3 month target here up at the top of the triangle towards 0.6. Otherwise, maybe we can look at initially the top of that gap there from back in December around 0.28 and the 200-day moving average around 0.32, 0.33 as the targets there over the next few weeks. Upside valid while we hold above the 0.17 area, which was the recent or initial April support for the stock. You can see the 50-day moving average rising. That's always good news when you're near the lows, and can be regarded as a decent signal, as can the bullish divergence line that we've had since December, where that third dip was the place to buy. Third dips tend to be the places to buy. On to Ascent, which looks like it's living up to its name at the moment. We've broken that line of resistance there from July, basically with today's move to the upside, so around the 3.4 pence level. Above 3.4, looking for the 200-day moving average, initially around 4.2. Best case scenario target here, the top of that broadening triangle from back in, basically this time last year. That's heading towards 8.5 pence, which looks rather ambitious. But again, we've got a pretty good setup there with the bullish divergence line once again. So it's rather like the active energy chart in that way. And such situations can deliver decent upside in percentage and in real terms. Moving along to Asimilar, which I think got listed on the Aquis exchange at some point recently, but correct me if I'm wrong. Here we've at least got it's actually listed on the Aquis on both exchanges. Here we've got a situation where suspicions that the shares have broken that trend line from February and we're going to have a little bit of a rally seem to be right so far. So breaking 25 pence, and with that bullish divergence line as well from January, we're already up at the 50-day line near 29 pence. End of day close above the 50-day line, and we could be heading up to the top of that January broadening triangle, if I can get the words out, at 37 pence, maybe as soon as the end of this month. Obviously, there's a bit of a positive read across there to AAA and Dev and other holdings that Asimilar has. So maybe we're looking at a new, more positive phase for the company. Onto a stock which gets the odd appearance here now and again. Barron Oil. Here we've broken recent resistance around the 0.085 pence level, so an end of day close anywhere above that, and we could be looking at a decent move to the upside. Got an old resistance line there from back this time last year, which is heading towards 0.17, which may be a bit optimistic over the next month, but maybe a 2 to 3 month view we could get that. Otherwise, just retesting the 0.12 to 0.14 resistance, 1-year resistance, may be the thing to shoot for, especially while we remain above 0.08. Moving along to Punter's favourite, which has been a bit volatile in the near term, but looking rather good now in the sense that we've got both the 50 and 200-day moving averages rising. We've had support coming in above the 50-day line just over the last couple of sessions, so that's encouraging. View is that while we're above the floor of that rising trend channel from July at around 3.6 pence, we could head much higher, up towards the top of the rising July, that resistance line projection from last July as high as 8 pence, perhaps by the end of next month. So getting quite excited about that, just on the basis that both the 50 and 200-day lines are rising, which is a pretty good technical signal. A stock which took a long time to get off the ground, but has now done that and kept on doing that. The break of that trend line in November was the start of the big change here for Blue Star Capital. Current situation is we had a mid-move consolidation above the rising 50-day moving average, and also a trend line break from January around 0.38. The view at this stage is that while we're above the 50-day line, at least, we're looking for considerable upside. That could be up towards a penny or 1.1p while we hold above the high to mid-30s in terms of the share price, and with the 50 and 200-day moving averages both rising. Looks encouraging, as does today's gap through the 0.45 resistance, so that's pretty impressive. If you're cautious, maybe wait for an end-of-day close or a weekly close above the February peak at 0.49, but looks like the shares are on their way, or continuing to be on their way. Bezant is next, and here we've got a situation where we've had a sort of double test this week of the 50-day moving average, but it looks quite healthy. There is a resistance around 0.21, but if that can break, then we're looking up to the top of that June rising trend channel at 0.27, maybe by the end of next month. Stock which doesn't normally make the grade in terms of the bulletin board heroes is Exchange XR. But here we've had a sort of a triple bear trap below the initial March support at 10.7 pence. And then a bear trap gap reversal, gap higher through the 50-day moving average and recent resistance. And the view at the moment is that while we're above the old July floor at 14.5 pence, we're looking for a move towards the top of the broadening triangle from back in July last year at 24 pence, perhaps as soon as the end of this month. Another relatively obscure situation is coming up in the form of i-Nexus. Here it looks like we've bottomed out finally. We've got that RSI support line and a close above the top of the gap at 4.88. It could be enough to get the shares up to 8 pence to the top of that August broadening triangle. Obviously, it looks like a rather widespread low liquidity situation, but at least the shares are up. Insig Ai is another stock which doesn't get much airtime either here or anywhere else, but an end-of-day close above the late March resistance at 29 pence could be enough to get the shares up to the top of that broadening triangle from December at 60 pence plus. If you're looking for, if you're cautious, you'd be waiting for an end-of-day close above 33 pence in the 50-day line to give us a retest of post-February resistance around 52 pence in the 200-day moving average over the next 2 to 4 weeks. Codel seems to be back, a bit of a punter's favourite. Here we've got a situation where we've got two higher lows since December. The trigger for the latest action, I would say, is a break of that resistance line there from February. That's running through around the 0.27 level. Above that, we're looking for at least a retest of post-February resistance at 0.36 by the end of this month. Always think that stocks which have a chart, as we're seeing at McColls, may be on the line in terms of the viability and survivability, but the latest move here with a massive 86% rise is rather telling. We've had an unfilled gap to the upside off support, which is one of our favorite signals. You had the trigger points at initial April resistance at 2.6 pence, or the March resistance at 3.1 pence, at least while we're above 3.1. Looking for the 50-day moving average at 4.3 pence, and maybe up to the floor of the old February gap as high as 5 pence by the end of the month. Just a couple of situations to go now. First one is Marchal or Marechale Capital. Here we've got both 50 and 200-day moving averages rising. We've broken above the March peak at 3.2 pence, and the longer we stay above that, the greater the chance of a move to the top of the rising trend channel from June last year at 6 pence, perhaps by the end of next month, and backed by the way the 50 and 200-day moving averages are both rising. Finishing off with Orphan, where I'm pleased to see that there's been follow-on momentum from the tentative recovery that we've had over the last couple of weeks. So breaking the 50-day moving average and breaking that line of resistance from the start of the year at 15 pence. Above that, looking for the top of a broadening triangle at 28 pence, perhaps by the end of next month. That's it for me today. More updates tomorrow.